Hello class, welcome to this chapter 14 handout answer video. In this one, we are going to run through a statement of cash flows and we are going to create one using the indirect method. Okay, so let me share my screen here. All right, so here we go. This is all going to be one big problem. It's all going to, they all kind of work together here. All right, so Robert's company, we have this following information. We have two balance sheets, okay? So it says one is our change in cash. So we had 565,000 at the end of year 2, 350,000 at the end of year 1. Positive $215,000. That is our change in cash. What is the use? What is the importance of that? Explain the role in the change of cash. It is our control number for our statement of cash flows. So once we do our operating, our investing, and our financing section, we are going to get a change in cash for the period. That change in cash should match what we just calculated right there, 215,000. Okay, so that's kind of the first step. Second step, we go into the operating section. Remember, we are using the indirect method here to calculate, to get our cash flows. So when we do that, we start with our net income. Our net income here, 450,000. Got it from right there, okay? It is giving to us calculate net income. Okay, so then we start thinking about our steps here. The first thing I do, add back non-cash expenses. Okay. The major non-cash expense we have is depreciation. Okay, so I am going to add that $135,000 back. After that is the only non-cash expense I have right now. Okay, so that's it for step one. Step two, I start comparing my current assets and I remember that they have an inverse relationship. So if I look up here, my accounts receivable, they decreased by $83,750 from X1 to X2, okay? So if that's an inverse relationship, I am going to add that to my statement of cash flow since it went down. On the other hand, my inventories are also a current asset. They went up by 10,000, okay? So if it went up and it's an asset, I'm going to subtract it on my statement of cash flows. And that's it for my assets. Okay. Step three, I go on to my current liabilities. Now these have a direct relationship. So when I'm looking here, it went down $92,500. That's my wages payable right here. Okay. They have that direct relate, so if it went down, I'm going to subtract it. Okay, and then that is it for step three. I've looked at all my, that's the only current liabilities I have. And finally, my last step is look at anything that should be in the operating section. So I need to look at gains or losses from sale of equipment or investments. So I have a gain right here. We do the opposite. Remember, we subtract gains, add back losses. So minus gain on sale, $50,000. I do my math here. Our total cash from operations works out to be $516,250. Okay, so there's how you use the indirect method to get your operating cash. Remember, it's just those 4 steps. 1, add back non-cash expenses. 2, compare current assets, inverse relationship. 3, compare current liabilities, direct relationship. And then 4, remove investment activities, subtract gains, add losses. All right, so now during the year, Robert's company sold, we got some information. We sold equipment with a book value of 140 for 190,000, original purchase cost of 240. New equipment was purchased. Okay, calculate the, so down in this little section down here, I'm going to do our investing section. I'm going to have to do some intermediate calculations up here too. But look, we received some cash from a sale. So we're looking exactly at cash. So we got 190,000 from the sale of the equipment. It also told us that we bought some new equipment. Okay, so how do we figure that out? Our X1 PP&E equaled $1,100,000. If we sold something that had an original cost of 240, that would be coming off our books. So that would make our new book value of stuff then 860,000. But as you can see then in X2, it is not 860,000. It is 1.075 thousand. 1,075,000. So in order to make that be true, that means we had to do a purchase of equipment for $215,000. And finally, we have cash paid for land. I do not know why those negative signs are on there. They're not on my copy. Okay, they should not be there. They won't be there in your homework. But our land increased by 218,750. So that means we paid out 218,750 from land. When we get it all together here, so our cash paid for investing then works out to $243,750. Okay, it's not cash received or cash from investing, it's cash paid for, because actually our cash is going down at this point in time. All right, now on to the last part here. Now we're doing the financing section. So we have to look at our financing options. So our bonds payable went from having 0 to 192,500. How do we get a bonds payable? That is because we received cash and now we owe that money, right? So we will have cash received from bond issuance of 192,500. Our mortgage payable in X1, it was $50,000. In X2, it was 0. So that means we paid it off. So we have cash paid for mortgage. $50,000. We have no change in our common stock or paid in capital, but our retained earnings changed. Okay, so our beginning was 912,500. It told us, I'm not going to scroll, but it told us that our income was 450,000. You remember that from the beginning? So that means our new retained earnings should be 1,362,500, but it is actually 1,162,500. The difference of 200,000 being dividends that had to be paid out, because dividends make retained earnings go lower. So we would have cash paid for dividends. Well, we add those together. We get our total cash paid for financing, because again, it's a negative of 57,500. And I'm gonna bring up another screen real quick. The last one is to make a statement of cash flows. So I'm gonna get you some line paper up here, so I'm writing it. So when I'm writing this out, it's just a little bit neater. There it is. No, I don't want that. I just want to lock it. I guess it's okay that it's right on the edges. Okay, so we're gonna start off. With our headings here. So there's how our heading would be. Robert's Company. Statement of cash flows for the year ending December 31st, 2000X2. Okay, we start over here. We're gonna have cash from operations. Okay. Remember, now we're just gonna copy over what we did. We start with our net income of 450,000, and then we make adjustments. Remember, I am just pulling this from what we did. You can go right back to our operations, and we're gonna see, we're just gonna write the same thing here. Depreciation expense. Plus accounts receivable. Minus inventory. When you're doing this on your homework, it might say, instead of saying plus depreciation expense, it might be, well, yeah. Well, instead of plus accounts receivable, it might be plus the decrease in accounts receivable. Okay, so just be aware of that. I'm more concerned that you know what to do with them, and as long as you know what to do with them. Remember, that gave us a total. $516,250. Okay. Then we have our cash flow investing. Again, we would just list these. Cash from sale. Cash paid for equipment. And cash paid for land. Remember, we are just copying these numbers that we had just calculated in the previous examples. Okay, so I'm going to switch screens now. I'm going to move on to a second screen. You're writing this on paper, just keep writing it on down straight, okay? And as I said, you're gonna be writing it down on straight. I'm going to start with a new piece of paper here, but I am going to mark at 516,250. That was operations. My investing, you do not need to write this down because you already have it. This is just for my use, okay? Because I need those numbers out on the edge. Okay, but you're still working your way down. So after you get your total at the bottom of what we did on the last page, the total cash paid for operations, next you have a heading, it's called cash from financing. Now we are just going to list these. Cash from bonds. Cash paid for mortgage. And cash paid for dividends. Okay, we list these in here. Because our total cash paid for financing. So now we have all of our three totals out here. We have our operations, investing, and financing. We add our three main numbers together, then it becomes our total change in cash. If we add those three, we get 215. That's where we go back to our control number now. Remember question number one, we found that our cash should have changed by 215. It did, we did here. So we put our total change in cash and then we add our beginning cash. So what did we have at the beginning of the year? Go back to question number one. 350. Gets us to our ending cash balance of 565,000, which is what it should be shown on our balance sheet, and it is. So there's how you would make a statement of cash flows using the indirect method. I should be able to get you through the homework in that chapter. Best of luck. As always, reach out to me if you have any questions. I'm here to help you. One more chapter left. Finish strong.